On our cash flow Excel template, it's very straightforward to enter your overheads for your cash flow forecasts. So I'm just going to come over here and I'm going to show you how easy it is to select an expense heading. So you just click on the drop down menu and select one of the expense headings listed. So if I wanted to put accountancy in there, let's go down to your next line, say let's have a look, printing, postage, stationery, telephone, let's have a look, insurance, and let's go for rent. Of course, you can carry on entering all your different overheads down there. If one of the headings that you require is not listed, if I scroll down here, it has got expense heading 28, 29 and so on. You can change these headings and you just jump across to the info tab, scroll down to the expense headings, and on this list, the ones where they've got text entered in the green cells, that's the text you'll see in the drop down list. The ones which are blank, it will pull through the expense heading 28 as we saw on the data tab. So if I wanted to change expense heading 28 to something else, I'm going to call it test expense. But equally, while I'm here, I can change any one of these to something else or to slightly change the actual heading. So I just quickly jump back to my data tab. I'll scroll down and I've now got my test expense. So it's very easy just to put your own headings and select the ones that are already there. The next column relates to VAT. If you're VAT registered, you can claim back the VAT. This applies to if your country calls it sales tax or GST, I know in Australia and New Zealand. So you just simply select the VAT rate that applies to that expense heading. So I'm going to select 20% relating to accountancy. If your VAT rate is not shown here, you can simply hop across to the info tab and enter your own rate and come back here and select it. Watch the other video which talks about VAT and sales tax, and that explains how that can be done. The terms for how quickly you pay or what credit terms you get with that particular supplier, you've got anything from 0 all the way through to 12 months. So I'm going to say that we pay this person in 1 month's time. Printing, postage and stationery, 1 month's time. I'm going to say telephone 1 month. Insurance might be, say, 1 month. Rent is 0 because we tend to pay it straight away. And test expense I'm going to put in 2 months' time. Then all you need to do is enter your expense. So I'm going to put in £250 in December for accountancy. I'm going to put in £50 a month for printing, postage, stationery. I'm going to put £150 in for telephone. I'm going to put £400 for insurance. I'm going to put £500 for rent. And my test expense is going to be, let's say, £175. Now you can go across and put in different amounts in the following columns. If those expenses are going to stay the same, you can just copy them across. So I'm going to copy those across to November for the first 12 months, bearing in mind we're starting in December 2017. And then that's it. So you just carry on going down, entering your expenses. You've got them split between wages and salaries costs. You've got general overheads and you've got financial overheads. So down, if we wanted to put something in financial overheads, so bank charges, and that tends to be 0 rated, tends to be in the month it's charged. You don't get credit terms on bank charges, unfortunately. So I'm going to just put £50 a month in there for bank charges and copy that across in the same way. If I just quickly talk about wages and salaries costs, I have talked about how this works with the PAYE video, and if you wanted to have a look at how that works with our cash flow Excel template, you can have a look at that video in full. But I'll just quickly have a look at this, and I'm going to select office wages and salaries. In this particular case, VAT doesn't apply, so I'm going to leave that as 0. But then I need to select a PAYE rate. And what this means is whatever expense I put in here, for example in December, this will split the amount between the net amount paid to the employee and the amount paid to government in terms of taxes. So I'm going to just select 20%. The payroll split is instead of the payment terms. You can change one of these two payment terms of 1 to 12 if you wanted to, if it was a wages and salaries cost, which wasn't where it got split between the net pay and payroll tax. But I'm going to leave this as a payroll split and then quite simply put in your amount. So I'm going to put in £1,500 in December. and then copy that across to November, and then you're done. So let's have a look at the report. So you have your overhead report, which will give you the detailed breakdown of your expenses. I'm going to do a Control N because that will get rid of all the 0 columns. So if you remember, we selected wages and salaries, and I put in £1,500 a month. That goes all the way across there. In general overheads, I put in accountancy, printing, postage, stationery, and so on, all the way down to test expense, and there's the amounts pulled through there. And then I had bank charges, £50 a month. If I wanted to print this report, just go print, and they'll be split out into the 7 pages because this is for 7 years, and then it will show you all those expenses on there. If I take a look at the profit and loss report, those expenses are brought through as a total. So we've got the total of our wages and salaries of £1,500, our general overheads of £1,525, and financial overheads, the bank charges, remember, of £50 total in December. And they follow through all the way through for the first 12 months of the cash flow forecast. Any VAT on your overheads will get dealt with on your VAT and sales tax, but at the moment I've got VAT turned off. And any amounts where we've put in payment terms, so for example these suppliers are paid in 1 month's time, the amount outstanding will show up on your balance sheet. So in this case we've got a creditor for general overheads of £1,200, and that's effectively what's outstanding at the end of the first 12 months. If I take a quick look at the monthly balance sheet, you'll see that the amount outstanding at the end of each month is shown all the way across this balance sheet.